All right, so we're officially recording. Guys, my name is Camille Westmoreland out of Murfreesboro, Tennessee, right outside of Nashville, originally from Winston-Salem, North Carolina. I've been part of iMarkets Live for almost 2 years in April. And so it's been an amazing opportunity. It's been an amazing ride. And so I haven't done one of these calls in a while. I'm pretty sure a lot of you all have heard or seen some of my videos on YouTube. And we have so many new people coming in. We have so many different things happening. And I felt like it was an opportune time at the top of the year to go ahead and do some foundational things to help make sure that everybody gets started off strong, especially new people or people who have kind of been sitting by because you didn't know what to do next. So on this actual webinar today, I'm not going to necessarily talk about those getting started steps as far as, you know, setting up your broker account or, you know, those different things. But what I will be focusing on is understanding pips, lot sizes, risk to reward, those things that can help make you a successful trader in the beginning, even before you really understand all the pieces and all the aspects. So give me like 2 seconds to share my screen. So bear with me. And I created a PowerPoint presentation, but honestly, it's not a lot of stuff on it because I wanted to be able to engage and type as we go, because the key to it is retention. So whatever I write, you write. And we're gonna kind of jump in here. So let me share my computer screen real quick, share my desktop. All right, so here we go, Forex 101 with me, Camille Westmoreland. So as I stated, the objectives for today include understanding pips and lot sizes, understanding risk to reward, how to enter a trade, how to copy, paste, and profit. And I left this off with IML tools. And if you have questions, you can feel free to unmute yourself. Well, actually, don't unmute yourself.
Your man, do you bet?
Hold on 1 second. Let me mute the lines because people are talking. All right, so I cut it off where you can't unmute yourself. I'm sorry. But just post your questions in the chat, and I'll be happy to get to each of those questions. And also, I do know with some other leaders on the line. So leaders, feel free. If you see questions out there that you know the answers to, please go ahead and answer those questions. Okay, so let's go ahead and jump in here. As I stated, we're going to talk about these 4 things today. So let's get started. So understanding pips and lot sizes. What is a pip? A pip is a standardized unit and is the smallest amount by which a currency price or quote can change. Now, I'm going to put that in Camille's terms because this is the technical Forex term. Basically, a pip is the value in which money is moving. So you will have little ticks that happen. Every time that happens, that is a pip move or a pipette move. Kind of look at it like a millisecond to a second, where the second is the pip, the millisecond is those little ticks before the full second happens. And so that's how you want to look at a pip or a pipette. So what I tell people in the beginning, if you can understand pips and you can understand lot sizes, it puts you in a great position, because when we first started IML 2 years ago, a lot of the tools and resources that you all have, we didn't have. And we learned by trial and error of blowing accounts. I blew a lot. But anyway, that's neither here nor there. I did that so you don't have to. And so a pip is basically the price movement of a currency pair. Okay, now a lot size, that references the smallest available trade size you can place when in the Forex market. So you may see people out here posting their profits, and you may see their lot size is 1.00 or 0.01 or 0.05. Those are lot sizes, but those do equate to money. And I'm going to actually go over that. So these two things, pips and lot sizes, are key to how much money you make or how much money you lose. And so that's why it's definitely important that you understand these 2 things, because that can determine what your next is after the trade that you get ready to enter. So what I want to do is keep it moving, and we're going to jump over here on identifying and calculating pips. So let me just show you this real quick. This is what your screen looks like on your phone when you're actually in MetaTrader 4. This is the advanced setting. I love this setting. If you don't have your phone on advanced, go ahead and switch it to advanced setting, because it gives you more information. It shows you the bid and the ask. Some people don't know what that means. The bid is how much someone wants to buy it for. So if you're trying to buy a pair at that moment, this is the price that you would get in at. The ask is how much somebody is willing to sell at. So if you get ready, you know, so that's how they play. Now, if you look at spread, the spread is the difference between the bid and the ask. So these are, you know, just little things I want to make sure you recognize. They're not as important right now, but just know whenever you enter a trade. So if you enter a buy, you're going to enter at the sell price. If you enter a sell, you're going to enter at the buy price. The spread determines how far that is. And that's why whenever you enter a trade, the trade is always negative first, because you're not entering really at the price that you're trying to enter at. There's a spread gap there, and you have to work yourself back up to that point before you can enter profit. And that's exactly how brokers actually make their money, through the spreads. And so whenever you're trading, always pay attention to the spread. If that spread is high, like 30, 40, 50, you may not want to enter a trade with that particular pair at that moment. And a lot of times brokers can fluctuate their spreads, and it's all really dependent upon what's happening in the news, what time of day it is, and all of that. So even when you get signals, and different broker spreads are different. So every broker spread is not the same. So that's why sometimes if you all have actually started trading yet, you may be like, oh, I got this trade, I entered it. You hear people talking about how they in profit, but you like, I'm not in profit yet. That spread can have a lot to do with that. So those are things that, you know, you definitely want to take into consideration. And so like if you're using, you know, swipe trades and different things like that, I just like to tell people those things, because sometimes people try to say, well, this doesn't work. These people profiting, I'm not profiting, I'm doing something wrong. A lot of times it can do with the spread, and that's just real. So wanted to throw that out there. So this is what I want to point out when we're sitting here talking about pips. Yes, the spread is the number below the pair icon. All right, so when we're talking about pips, this can kind of get to the point where it just throws some people off. But let me show you how to determine where the pip is. You see these giant numbers right here? Let me come over here. Pull this out the way. Give me a second. I'm trying to unshade it. All right, here we go. These big numbers right here, these are your actual pips, okay? So whenever you're looking at a trade, when this goes from 19 to 20, it's moved a whole pip. These little numbers are what is known as the pipette. So one of the first thing is that I want to make sure that you understand is how to do the math. And it's basic math. It's no actual science to it at all. So let me just show you, and you can pull out your calculator because I want you to play. I want you to answer my questions. All right, so let me insert a text box real quick. All right, here we go. So let's just use Euro USD for example. So you got 1.24199. As we all know, and I'm just gonna bold it so it stands out, that is the pip, okay? It's really hard to tell, but let me see, hold on. Here we go. Okay, that's the pip, okay? Now, just from a calculating standpoint, the first thing I want to do is just show you how to calculate pips. And you do basic math, so if you got a calculator or whatever that looks like, you may be able to do it in your head, because I know a lot of you all may use the web analyzer. And with regards to the web analyzer, how you have to calculate those 5 pips real quick or those 20 pips real quick to make sure you hit it. you're good with calculating pips. But for the person that doesn't know, how to do that, let me just show you. So let's just say you entered this pair at 1.24199, and now the pair has moved to 1.24. Let's do 1.24686. Okay, so it's moved, right? Now, in its movement, right here, all you're literally doing is putting this information in the calculator, or however you choose to calculate. So you should be able to see my calculator here. So we're gonna do, I'm gonna just do the bigger number first. So I'm gonna do 1.24686 minus 1.24199. So that gives you, what was that number? 0.00487. Okay, so remember, as you can see, spots 3 and 4, spots 3 and 4, spots 3 and 4, okay? So spots 3 and 4 are the pips. So in this case, you would just move your decimal point behind this second spot, which takes you to 48.7. So that's telling you from 1.24199 to 1.24686, that is a total of 48.7 pips. If that makes sense, type yes in the chat. If that makes sense, type yes in the chat. Perfect. All right, we getting somewhere. We getting somewhere. All right, perfect. So somebody asked the question, what is the difference between whether the pip goes up and down? It's really just the price movement of the market. You want to be on the right side of that. So if you're a buyer and the pips go up, then you're in profit. If you are a buyer and the pips go down, you're at a loss, okay? But if you're a seller and the pips go down, you're in profit. And so as you continue to plug into the education, you'll be able to start learning more about the trends. You'll be able to learn more about, you know, if you should be buying or selling, you know, or what that looks like. So to repeat that again, if the price of a currency is going down, if you're selling at that point, you are in profit, okay? And if the price is going up and you're in buying, then you're in profit. So whichever way it's moving, you want to be buying or selling in conjunction to that move. Okay. And the reason that I moved the decimals is to show you a clear number for the pips. So as you can see here, 4.8, that is the spots 3 and 4 in conjunction to this pair 3 and 4. So that's telling you it's 48 pips, but it's really 48.7. You want to get credit for everything. So whenever you do the math, always move your decimal place behind the two big numbers. And that's going to tell you your exact number of pips in that actual movement. All right. Here we go. Now, I'm going to do another one, but I want you all to actually tell me the answers. Okay, so I'm just going to pick some randomness here. We're going to go with USD CAD. The entry is 1.23256. Okay, and we got here, this 2 and this 5 are the big ones. I made it a little too big. All right, here we go. All right, and then we're going to take it to 1.22935. Okay, and the 9 and the 3 are in the space in accordance to this particular pair. And I want to know how many pips difference that is. I'm doing my math too, because I just made that up randomly. All right, I see y'all. Excellent job, 32.1 pips. Okay, okay. All right, so we had 32.1 pips. And what they did was did the subtraction and they got 0.00321 and you move the decimal point behind the 2 and you got your 32.1. Awesome job. All right, scrolling through these answers. All right, gotcha. Perfect. All right, I'm gonna give you one more and we're gonna move on. Just wanna make sure you get a little bit of practice in here. All right, so let's jump on over here and we're gonna do 135. Nope, I don't wanna do that one. Let's do 0.93366, which is USD CHF. Okay, we're doing USD CHF. And that's the entry point. And then we're gonna take it all the way to 0.94157. All righty. And I need to do some math. See what y'all got popping. Okay. I don't know if it's right or not, but everybody putting the same thing, so I'm assuming so. I'm gonna check it out real quick myself. $94157 minus 93366. Yep, that's right. Excellent job. Excellent job. 79.1. Y'all the bomb. Like, why are we doing this training? Y'all got this. Y'all got this. All right. So let's keep it moving in. So now you understand how to identify and calculate pips. On the advanced setting, you're looking for the 2 big numbers. And so this is going to come in handy with the next parts that we are about to jump over into. Okay. So here we go. Okay, somebody asked me if we could do one for JPY in this group. Sure. All right, let me pull it real quick. Yeah, because different pairs have different movements happening. And so I'm gonna actually do a little tricky thing. It's not gonna be too tricky, but you know. So you got 135.026 right here. And this is JPY, okay? And let's change that to, oops, wrong thing. Let's do 136.239. And you tell me what the difference is. See what y'all got. I see one person. Well, let me go back. Hold on. Let me go back to these. Okay. 1, 2, 3, 4, 5. Okay, so I see 5 people got it right. It's actually 121.3 pips. Okay, so remember, after you do the math, move that decimal place behind that second point. Okay, so some people just moved it one place. Like, no matter how many numbers are showing ahead, like, always move that decimal point behind that second big number. So 121.3 for those of you all who put that. Awesome job with that. All right. Does that help? All right, perfect. All right, so let's keep it moving. Okay, let's see. It's not always the 4th digit. It just depends. So like, for example, If you look at Euro JPY, it's going to be after the second digit. If you look at Euro CHF, it's after the fourth. So it just varies. So that's why you want to pay attention to that when you're looking at the actual chart to see if it's after the second, if it's after the, you know, all of that. The numbers are the only reason the numbers will be negative is if you do the difference between the two and you don't switch it. It doesn't matter if it shows up negative or not. Just move the decimal point because it's really just the difference between the two. It's not traditional math in that sense of negative 487 pips per se. So yeah, I hope that answers your question. All right, so now next slide, lot sizes. So I want to jump in here on lot sizes real quick. My screen is blank because I want to write this out. The way that you can tell where to place a decimal is to look for the two big numbers. I always place the decimal behind the second big number. So if you have, let me see. So if you're looking at GBP USD, the second big number is in place 4. At place 4, so you're going to move your decimal point behind place 4. USD JPY is after place 2, so you move your decimal place behind place 2. And so forth. And so that's how you'll know where to move it to properly calculate how many pips actually occurred with that movement. All right, so let's clear that off. Just clearing some people drawing on the screen and stuff. I wish I know how to like cut it off, but I just can't remember right now. It's not that important. Can y'all start writing on my screen? Okay, there we go. All right, cool. So let me move back over to the other chart, next screen. Okay, so now we're going to talk about lot sizes. So we talked about pips. I'm going to talk about lot sizes, and then we're going to go into a space where we are able to actually bring the two together so I can show you how important they are with regards to trades. So here we go. Let's insert a text box here. So with regards to trading, there are actually 3 different types of lots. So you have your standard lot, and but for the purposes of education, I'm not going to go too deep in with regards to all the Forex talk and lingo. Like, I want to put it on our level, you see. So I'm not going to talk about it's 10,000ths of this and da 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 da. So a standard lot means if you're doing 1.00 or greater, okay? A micro lot equals anything from 0.10 to 0.99 lot, okay? So sometimes you'll hear people say, I traded a standard. If they say I traded a standard, that means that they did a 1.00 lot, which is equivalent to $10 per pip, okay? You may hear some people say, I traded 5 standards. That means 5.00, which is $50 a pip. So just kind of showing you this piece. So if you hear this lingo on IML TV or anything like that, you can kind of relate. And then you have your mini lots, which are your 0.01 to 0.01 to 0.09. So that's just mini, micro, and standard, just a basic knowledge. So I just wanted you to know that if you do that. Okay. So what I'm going to actually show you now is the value, because as I stated, the pips actually tell you how the price is moving. Your lot size determines how much you make with the move. Okay, so here we go. Make note of this. If you trade 0.01, that is equivalent to 10 cents per pip. 0.02, 20 cents per pip. 0.03, 30 cents per pip. And you get the, I'm not going to sit here and type them all out, but you kind of get it. 0.04 equals what? 40 cents a pip. I wrote 50. And 0.05 equals 50 cents a pip. Okay. Now, these are like your mini lots. So let me show you some of the micros. So 0.01 equals $1 per pip. 0.20, $2 per pip. 0.30, $3 per pip. And just to kind of take you out the box a little bit, if somebody did 0.78, that equals $7.80 a pip. So you're not stuck to these standards. You could do 0.23, you could do 0.06, 0.98. Like, you can really do whatever as long as your account can hold it and they let you actually enter that in a particular trade. And so that's how that works. Now, once you get here, as I stated, that's $10 a pip. 3.00 equals $30 a pip. If someone did, I seen somebody do 3.00, that's what, $230 a pip. So that's how lot sizes work. So now I'm getting ready to help you bring that together with regards to risk to reward, because a lot of the times, I know like myself, when I first got plugged, I literally was just randomly picking lot sizes, didn't understand risk to reward and all of that, and was blowing accounts. And so now I'm getting ready to show you how to bring the two together. And I have a couple of examples that we're going to work through together, just to kind of make sure, you know, we get there. All right. So understanding risk to reward, your risk is the difference between your entry point and your stop loss. Your reward is the difference between your entry point and your take profit. Whenever you enter a trade, you want to get in the habit of never risking more than 3% of your account on a trade. You can make the money back. If you take an L, it's okay. You can make the money back. Also, you want to make sure to determine, let's see, how do I want to say it? A trade is a good trade if your ratio of risk, ratio of risk to reward, y'all, my typing today, like, risk to reward is 1 to 2. So you want to make sure that you're not risking, you want to make sure your reward is at least 2 times more than what you risk in order for that to be considered a smart and profitable trade. Okay, so we're going to pull up some examples. And so let me pull up my examples real quick. And so make note, your risk is the difference between the entry point and stop loss. The reward is the difference between your entry point and your take profit. So what we're going to do is I'm going to give you an entry point, a stop loss. Sorry, slide my chair up. Entry point, stop loss, take profit. I want you to calculate the pips to determine if this is a profitable trade. And then I want you to tell me if this is a buy signal or a sell signal. Okay? So we're going to start there. And then what I'm going to do is give you a lot size after we do that part. And you're going to tell me from a dollar standpoint how much you're risking to gain. All right, so and if this is clear, if y'all have questions, let me know. If it's clear, say keep going. I can go back if I need to. Just tell me, you know, so I'll know. Let me see. Let's see. Sorry. So, okay, someone said, do we risk more than 3% in our late night session because we're on phone with a professional? A A lot of our professionals are a lot more riskier, so it's really up to you. 3% is what I recommend, especially for a newbie. But it's really based off of your level of risk tolerance. Some people can't take it. And if you can't take it, then don't do it. You know, but at the same time, you know, some people don't use stop losses. It's totally up to you. These are just measures as a new person is what I would recommend, but it's not law. It's totally up to you at the end of the day. I will say some traders may risk more, some may not, because honestly, it's not in the number of pips that you're holding out, it's your lot size that can play a role into that. All right, let me see. Can you back up? Did you say if you enter the market at a sale, one would pay? So basically, the bid and ask. The bid, think of it like this. A bid means a buyer wants to buy. The ask means a seller is asking for this. So if you are wanting to buy in at a certain price, there is a spread. So you, even though you're buying at that price, you're being entered based off of the spread amount, which is at the selling price. So once you enter, you're really buying at the price you requested, but because of the spread, your entry is a little ways off from that. And then once your price gets back up to your entry, that's when you get to the point of entering into profit. Okay, so risk. Okay, so reward is the difference between your entry point and take profit. Risk is the difference between your entry point and your stop loss. Okay. Okay, so clicking on pips one more time so you can take a picture. Sure. Here we go. Should pop up. There we go. So you should be able to take a picture of that. Yeah, it'll actually be recorded, and I'll be posting it in the members only. You said the other one, are you talking about lot sizes, not pips? Okay, perfect. All right, let's keep it moving. So here we go. As I stated, 3% not law, but it's a great way to, you know, get into a discipline versus, you know, because a lot of times we can each get into a gambling mindset. Like, I know it's going to turn around. I'm just going to keep holding. And you got $100 account, you negative $3, which is 3%, but you like, I'm just going to keep holding. Next thing you know, you negative $50 and you know, and you just never know. So I would rather take that $3 loss and make it back, you know, but to each his own. I'm just, you know, as an educator telling you. Crypto is calculated the same way. The whole concept of pips and all of that is the same. Yes, to answer your question. All right, so let's go ahead with our first example. So we're gonna be doing, I have 3 examples and I want you to tell me if these are good trades, bad trades. I'm gonna give you the entry, stop loss, and take profit. All right, here we go. First one. Let me get it all in here first, and then I'll tell you which numbers are the pips. All right, so the 0.2, the 6.7, and the 9.5 are the pips. So I need you to tell me the risk, the reward, and if it's a buy or a sell. And post your answers in the chat. Yes, Dr. Kathy. Y'all make sure y'all taking good notes now. Okay, they told me it's a buy. Good job. All right, somebody tell me the risk in pips and the reward in pips. How many pips are you risking to gain? Somebody tell Tevin why it's a buy. Exactly. It's a buy because the take profit is higher than the entry point. Okay. All right, Pamela. Okay. Amir, good job. Sakisha, good job. Okay. Scrolling through here. Dr. Kwandi Jackson, good job. All right, perfect. Okay, excellent. So for what I'm seeing, the risk is 35 pips. The reward is 93.2 pips. Okay, it's a buy. Thank you, Connie. Excellent job. Checking, looking through these notes. So if the take profit is higher than the entry point, that's a buy. Exactly, because that means it's gone up. If the take profit is lesser than the entry point, then it's a sell. Okay, make note of that. All right, Pamela, what part of risk do you want me to go over? I'm so proud of y'all on here. Okay, so let me ask you this. You're risking 35 pips to gain 93. Is this a good trade? Would you say this is a good trade? Excellent. Excellent. See, y'all giving me so much life right now. All right, that's good. Okay. So that one's good. All right, we're going to give you another one. Y'all ready? I got two more. And then we'll keep it moving. Here we go. The entry is 0.93366. The stop loss is 0.93585. And the take profit is 0.93156. So 3658 and 15 are the pips. All right, so I need to know the risk, the reward, and if it's a buy or a sell. Okay, okay. Good job, it's a sell. Hey, Miss Vicky, I see you out there. Exactly, Aretha. It's a sell because the take profit is less than the entry point. Excellent job. Remember, your risk is the difference between your entry point and your stop loss. The reward is the difference between your entry point and your take profit. So your reward is telling you whether it's a buy or sell. Is the price from the entry point going up to the take profit, or is the price from the entry point going down to the take profit? That's what you're looking for. Okay, risk 21.9, Pamela. Okay, good job. Good job. All right. Peter, excellent. Excellent job. 21.9. Yeah, that's not a good trade. Okay, it's a sell. Is everybody else getting these numbers? Excellent, Amir. So, Janetta, are you doing the basic math, or where are you stuck? Yeah, I can do it on the slide. Let me pull it up. Okay. Yep, sell, risk 21.9, reward 21. Good job. Okay. So here we go. Let me do it on the screen. Not a good trade. Good job. Now, do you want me to just do it on my calculator or actually type it out? What works best? Okay. Here we go. Let me do another. Let's just do this. Actually, we're going to insert a text box here. All right, so we got 0.93366 minus 0. What is it? So we're working on the risk first. So remember, the risk is the difference between the entry point and the stop loss. So we're going to do 0.93366 minus 0.93585. Now remember what I said about, you know, it don't matter which one, first, second, or whatever. The negatives don't matter. You just want to do the difference between the two. So here we go. You got 0.93366 minus, can y'all see my calculator on the screen? 93585. Okay. Let me see. Okay, perfect. All right. So when you do the difference between those, you get 0.0. Hold on, let me make sure I type this right. So you got 0.93366. I'm sorry. 585. I like to do the bigger one first just for the purposes of making sense. Did I write that right? 93585 minus 0.93366, which gives you this, 0.00219. Remember, these are your pips, okay? These are your pips. The numbers after the pips are your pipettes, like your milliseconds. So when you do the math on the calculator, this is what you get. Remember, because these are the pips, you're going to move your decimal point here. So that's where you get the 21.9 is what you're risking, okay? Now, for the purposes of, I just don't want to type it all over again. Let's go here, okay? And you have 0.93366, which is your entry. Your take profit is 0.93585. 156, okay? And you do the math between those two. So here we go with the calculator again. 0.93366 minus 0.93156, which gives you 0.0021, okay? 0.0021, and you can add the extra zero. So remember, spots 3 and 4, spots 3 and 4, spots 3 and 4. So that's where you get 21.0 reward. This is not a good trade because you're risking just as much as you can stand to gain, which is not worth the risk. Okay? Got it? Yay, it's starting to click. I'm excited. All right, perfect. So that's how you go about that. All right, now I got one more example just to make sure we got it. Okay? We're going to do one more and then we're going to keep it moving because we've been on here almost an hour. And I like to keep it short, but I want it to be thorough. So if y'all want to keep going, y'all tell me. Otherwise, we'll cut it off. But I want to make sure you get as much as you can get. All right, so let's do one more. And this one, here we go. Your entry point is 1.15961. Your stop loss is 1.15733. And your take profit is 1.16392. Okay, so the 96, 73, and 39 are your pips, are your big numbers that you would see in MetaTrader 4. All right, so tell me if this is a buy or a sell, the risk to reward, and if it's a good trade or not. Okay, buy, excellent. Excellent. And Miss Brenda, the first one I did was with JPY. The first one with the 135.02 was JPY. All right. Excellent job. I see out there risk 22.8, reward 43.1. It's a buy. Okay. Would y'all say this is a good trade or not? Okay. Some say yes, some say no. Why would you say yes and why would you say no? I would say yes, but why would some say no? If you say no, tell me why you think it's not a good one. Yeah, it's under the ratio of 1 to 2. Excellent. But it's so close to doubling, I would personally still take it. But, you know, each his own. You know, I get it if it was at 44 or 45, you know, that's how that would go. All right, excellent. So that's the cool thing about it. We each have, you know, the option to take, you know, trades as we see fit, but 1 to 2 ratio is ideal. With it being so close to doubling, I personally would still take that trade. Okay. Yay, Candace. All right, so let me do this one for you real quick, and then we got to go back because I forgot to actually ask you from a dollar standpoint, because that's the part that matters too. So you understand the risk to reward from the PIP standpoint. However, However, when the lot size comes into play, I want to make sure that you see that too, because, you know, we all know that the bigger the lot size, the more money you can make, but also the bigger the lot size, the more money you can lose, you know. And so you want to make sure that you understand that, because if you have $100 account, I'll just kind of show you some examples of what that would look like. So yeah. All right, so here we go. So on your calculator, you're gonna take the entry point. So first we're working on the risk, okay? So you're gonna take that entry point, 1.15961, and you're gonna subtract the stop loss, 1.15733, which gives you 0.00, what was that, 228. So spots 3 and 4, spots 3 and 4, spots 3 and 4. So that's 22.8 risk in pips, okay? All right, next, we're gonna go to the reward, and I'm just gonna put the take profit first since it's the biggest number, it just makes sense. So you're gonna do 1.16392 minus 1.15961, and let's put that in the calculator. 1.16392 minus 1.15961, and that gives you 0.00431. So remember, spots 3 and 4, spots 3 and 4, decimal behind spots 3 and 4, which gives you 43.1 reward. So you're risking 22.8 pips in order to gain 43.1 pips. Okay, so however you choose to enter this trade from a 1-to-2 ratio standpoint, remember, as I stated, none of the stuff that I stated is law, but you know, hey, okay. So with that being said, I'm gonna leave this here real quick because I wanted to point out with the usage of lot sizes. So let me just kind of show you a couple of examples of some smart trading versus some not so smart trading. All right, here we go. So you have $100 account, okay? Technically, if you want to, okay, sorry, I just saw my thing flash and I wanted to make sure I didn't miss any questions, like immediate questions. Okay, so let's just say we're following the rule of not risking more than 3% on an account, okay? So we know if that's a $100 account, the most you need to risk on a trade is $3. So when you look at this particular trade, you're risking 22.8 pips to gain 43.1. So just from a trade standpoint, let's just start with 0.01. So remember, 0.01 is 10 cents per pip. With this particular example, you would take 22.8 times 10 cents. Okay, so what is 22.8 times 10 cents? $2.28, okay? So you're only risking $2.28 in order to gain, remember, 0.01, 10 cents per pip. The reward is 43.1 times 10 cents, which is going to equal $4.31. So in this particular case, you're risking $2.28 to make $4.31. Okay, excellent job, Pam, Mahogany. Good job. All right, now this is where it can get crazy, especially like if you're being over risky. Imagine if you're just like, don't know any of the stuff I was just teaching you, and you decide, hey, I'm going to throw 15 cents out there, okay? Not knowing anything. So 15 cents is $1.50 per pip. Okay, so let's just say on the reward side of everything, you can make a lot of money, but let's just say 22.8 times $1.50. Let's just say this happens to go to your stop loss. Okay, so you got 22.8 times 1.5, so that's 34.2. So on one trade, you lost $34 on a trade just because of improper risk management and all of that. This is not where you want to be. You know, the bigger numbers will come as you move. You know, yes, 0.15 is the lot size. Okay. So, you know, as you move, and then imagine, this is what some people do. Some people, Nino, some people like myself, I might do this. Let's just say this the same trade, and I do 0.15, 0.10. So that's $1. And I'm just out there just playing around. 22.8 times $1. And that equals $22.80 risk. So I'm doing multiple trades with these big lot sizes, not taking into account what I have going on. So literally, if I only enter these two trades, I've lost half of my account already, when I could have controlled that risk by sticking to my 3%. You see what I'm saying? So that's why all of these pieces tied in together make sense. Now, so yeah, you may risk $34.20. Good job, Lanika. And your reward is $64.65. Now, the risk of that is you can make that $64.65, but in a crazy world, you lose that 34. And the crazy thing about it is that market makers, and people talk about this sometimes, but market makers, they can see those stop losses you have and may try to hit them, and then go right back in the right direction. So, you just want to be a little bit more careful with regards to that piece. Do y'all want to do one more example of this? And then I want you to be able to tell me, I'm going to give you a lot size and account balance, and I'm going to give you two lot sizes and account balances, and tell me which one should be used for that person. Okay? All right, so I'm going to go back to one of the examples we did first, and I'm going to give you an account balance, and I'm going to give you two lot sizes. And I need you to tell me which lot size will be smart to use. Hey, Latrice. Okay. So here we go. Entry point 135.026. This is a USD JPY, I believe. Your stop loss is going to be 134.676. Your take profit is going to be 135.958. Okay. So you all I ain't gonna make y'all do all that math over again. So let me tell you, because we did this one already. So the risk is 35 pips. The reward is 93.2 pips. We determined that it was, what was it? Oops, sorry. I typed that wrong. I was like, that don't make sense. All right, we determined that it was a buy. Okay, so let me delete this because we don't need this. So this person has a $500 account. Okay, and they're going to do a point. Let's see, a point. Hold on, let me do some math real quick before I tell y'all. Let's see. Okay. So they're going to do a point. Let me see. Hold on. Okay. So they're going to do a 0.04 lot, which is 40 cents a pip. They're going to do a 0.10, and they're going to do, yeah, those are going to be the two. So out of these two, which one would be the best? I want to know the risk to reward using both lot sizes, as well as if this was your account, which one would you go with and why? Asking for a friend. Megan, hilarious. I know, right? Okay, yeah, risk $14. Yes, 0.10 is $1 per pip. Reward 737.28. Okay. Let me see. 3.2 times. Okay. Perfect. Dr. Kwandi, excellent job. So we've gotten so far that with the 0.04 lot, the risk is 14. Good job, Devontae. Tamika, good job. Yep, Teresa, excellent. $14 is the risk. What's the reward? Yep, 37.28. Okay. 37, excellent. Good job, Quincy. Excellent. Now let's jump over to that 0.10 lot. And I wrote that wrong. It's $1 per pip, not 10 cents. Sakisha, excellent. Miriam, good job. Kyle, good job. Felipe, okay. Heard, excellent. All right, Tamika, excellent job. 93.20. Sakisha, good job. That's your reward. Risk $35. Excellent job, Pamela. To get 37.28, so what we're looking at is 35. Let me see, 37.28. So you're doing 93.2 because that's the reward, and 0.04 is 40 cents a pip. So you're going to do 93.2 times 0.40 for 40 cents, and that gives you 37.28. All right, excellent. Okay, so looking at both of these examples, you're risking, okay, good job, Candace. Yeah, 0.04 is the best lot size. Why do you say that, Candace? I agree, but you tell me why. Why is it the best lot size? Yep, because it's on the 3% mark. Excellent job. All right, perfect. So some people will go with the 10 because they have a $500 account and want to be a little bit more risky. $35 is roughly maybe 7 or 8% risk. So a high risk trader may go with that, but 3% is definitely what I recommend for a new trader. So that's just my story and I'm sticking to it. You know, but some of us would probably do the 0.10 with a 500 account. But it's great to start putting these disciplines in place in the beginning because it makes you a more profitable trader, you know, but as you get comfortable, you may choose to, you know, increase your risk and things like that. So anyway, so we'll keep it moving. So it seems like everybody pretty much has a handle on that. And also if you don't, this will be reposted for you to take a look at again. Let me go to the next slide. I got a few more things I want to cover real quick. I'm going to try to knock it down. EJ, excellent job. Excellent. Yep. 35. Yep. So Quincy, okay, so you said, so when I want to find out whether the reward is good or not, multiply the lot by the reward. Well, really, honestly, all you need to know is the risk to reward in pips. So remember, when you're doing the math for the pips, the risk is the difference between the entry and the stop loss. The reward is the difference between the entry and the take profit. You want to make sure that's a 1-to-2 ratio. If that's a 1-to-2 ratio, then it's a good trade. And then from that point, you just do the lot to determine how much money you're actually putting out there per se. So somebody asked me, if we are trading with the lot size of 0.03, which is 30 cents a pip, and you get a trade and we are taking 100 pips, I'm assuming that I should move up to 10%. I'm not sure what you mean by move up to 10%. So like the trade, 100 pips times 30 cents is, I think, what? $30. So you would make $30 on that trade. Sometimes you do know the exact entry before. Yeah, both are good trades, EJ. Yeah, both are good trades. You do sometimes know the exact entry before you buy or sell. But what I tell people when I'm entering a trade, yeah, FX Book has an excellent pip reward and risk calculator. Thanks for that, Mahogany. I also have one that I have downloaded on my computer, on my phone, which is called Lot Size Cal. And so I'm actually able to put in the actual pair, how much my risk is, what my account balance is, and how much I want to risk. And it'll automatically tell me the lot size. So I use that as well. Okay, so all right, so let me jump here. So this may be an answer your question. What I do, lot size cal, like lot size calculator, CAL, but just CAL. The members only group, Sheila, you can search for it on Facebook, and it's for anybody connected to Dr. Jewel Tankard. And once you get onto Facebook, it'll ask you some questions, your IML, user ID, and all that good stuff. And once your information is verified, you'll be added to the group. Okay, so let me just show you this real quick. When entering a trade, entry point, stop loss, take profits, pips, and lot sizes are the main things that you need to know before you know anything else. And we've pretty much covered all of these today. So it literally puts you in a great position to be able to enter a trade even before you actually know everything. And so I just want to kind of go over a few things real quick, and I'm going to share my phone screen with you here in a second, just to kind of show you how this works. Now, with regards to entry points, there are 5 different types of entries you can have. You can have market/instant execution. That means that you're going to enter the trade as soon as you hit buy or sell. So that means you're going to enter at whatever the price is at that point when you hit buy or sell. when you're using the products and services of IML, whether it's swipe trades or harmonic scanner, a lot of times there are pending orders. And so I just placed this here because these are the 4 types of pending orders that you may enter at any given time. And on the next screen, I'm going to actually show you what you're looking for in swipe trades. But this is actually good whenever you're using a harmonic scanner, because a pending order is basically saying, if the market does this, then I want to do this, okay? And so, for example, if you look at buy stop, this an order placed above the price and price keeps going up. So let's just say the price is at $100 and you're like, okay, when it gets to $150, if it gets to $150, I know the price is going to keep going up, so I want to buy. So a pending order lets you put in something without you having to watch the market. So if you're in the shower or sleep and the market gets to $150, boom, MetaTrader 4 is going to knock you into that trade. So that's what a buy stop is. That means that the price is above, the place you want to enter is higher than where it is now. Okay. A buy limit is basically saying, you know, if the price goes down, I know it's going to bounce back up. Kind of plays into the support and resistance. Honestly, I still don't know these terms without looking at this chart, and I've been in for 2 years. And when I'm entering a trade, swipe trades will tell me, harmonic scanner doesn't. If I'm not where I can look at this chart, I just pick one. If I know it's a buy, I pick buy stop. If MetaTrader 4 don't let me enter it, I just go back and pick buy limit. That's just, you know, me. You know, I have yet to figure this. I mean, I see it and it makes sense, but me remembering it after I'm not looking at it, not so much. But that's the awesome thing about MetaTrader 4. If the option that you picked is invalid, they will not let you into the trade anyway. But it's good to have this. And so you can take a screenshot of this, or if you literally go on Google and just type in pending orders Forex. If you just, that's what I did today. Type pending orders Forex and this will pop up, and you can literally just copy and save this, add it to your favorites on your phone so that you can go back and reference this. So somebody asked the question previously, do you always know the entry point before you enter a trade? Not necessarily. If you are using swipe trades or harmonic scanner or anything like that, they'll tell you the pips. Well, in swipe trades, they'll tell you how much you're risking to gain in pips in the notes at the bottom. Harmonic scanner doesn't, so you have to calculate that. In most cases, those particular trades are pending, so it'll be one of these 4. Now, when you're online trading with the traders, they may tell you to go ahead and enter a trade. Now, what I do is if they tell me to buy or sell, I automatically buy or sell. And then if they give me a stop loss and take profit, at that point is when I go calculate from my entry, because everybody's entry is going to be different based on when you enter that, you know, when you hit submit. So after I'm in the trade, after they give me the stop loss and take profit, I go in and calculate it. If the stop loss and take profit that they gave me is a little like not what I would want, like if the risk to reward is a little off to me, or I don't want to risk that much, you have the freedom to adjust your stop losses and take profits how you choose. So that's the awesome thing about this. These are just recommendations and suggestions, but it's up to you, you know, to control your account how you want. They may give you the entries, they may give you a stop loss, they may give you a take profit. You just adjust it. Now, if it's a market execution type trade, I want to get in as close to the entry point as possible. So I enter the trade and then I go back and hit modify and add my take profit and stop loss. Some people who have all the stuff will try to key everything at that time. Get in the market first, then modify. Because if you're taking the time to type all of that in, that price is continually moving and you could miss the perfect entry. So that's what you want to do. So entry point, stop loss, take profit, you understand pips, understand lot sizes, and now you're in position to enter a trade. And so I'm going to show you how to actually enter a trade I won't be able to actually enter the trade because the market is closed, but it will let me go through the motions of entering a trade. So before I do that, because I'm not going to be able to continue to share this screen when I share my phone screen, but I just want to show you this. I pulled these up from my email because, you know, with swipe trades, you're able to get alerts to your phone, and you're also able to get emails. And so I just took these screenshots real quick of some emails that had come through. And as you can see, remember I stated, and let me move this over here so I can have this. Hold on. Let's see. Move this out the way. Okay, here we go. All right. So as I stated, remember with entering a trade, all you need is entry point, stop loss, take profit. And then you figure out, well, I didn't put it on here, but in swipe trades, they'll tell you the pips. You determine your lot size. So these are the keys, okay? If you don't know what you should put as your lot size, just start small. Like, go with something you've been using. If you've been sticking around 0.01 or 0.02, just put that in. You know, but if it's a pending order, which most of these are, you have time to set it up. So for example, they give you the entry point here, here, here. They give you your stop loss here, here, here. They give you your take profits. So most of the time you're gonna get 3 or 4 take profits, sometimes 2, sometimes 1. Take profit 1 is also gonna is always gonna yield the least reward. Take profit 3 is always the greatest reward. Okay, so you can pick one. Some people will enter this trade 3 times and enter the exact same information each time, except they will change the take profit on each one. So you can enter trades more than once. So I just want to make sure that you're actually clear on that. And even here's an indicator. They're telling you that if they use a 0.03 lot, they're risking 1% on $1,000. So this is even a key, like, okay, if I only got 500 and they're doing 0.03 to risk 1%, you know, maybe I should stick around 0.01, 0.02, or technically, if you want to risk 3%, you could stay around 0.03. So these are just little indicators. So even here, it's telling you a 0.02 lot will risk 1% of 1,000, or a 0.04 will risk 1% of 1,000. So they give you those keys, and I didn't screenshot it, but below here under take profit, they actually have already calculated the pips. But you have time to do that whenever it's a pending order. So entry point, you have it. The entry point isn't there yet, so they're telling you this is a pending order. If you see this, that means you got time to do some math. If you see this, buy by market or sell by market, or that means enter this trade right now. It's not a pending. Enter this trade right now, okay? And so I wanted to make sure that you see that, okay? So any questions on this before I get ready to share my phone screen? Is this clear? It actually puts you in a position to copy, paste, and profit. Let's see. No, you can't enter pendings or anything when the market is closed. You can't do anything. This is swipe trades. So you have to have subscribed to this with your IML subscription. If you're on the Platinum Plus package, you have access to it. You just need to go to the App Store, download swipe trades, and log in with your IML username and password. If it says buy by market, that's saying enter the trade at the market price right now. All right, cool. So let me stop sharing this real quick so I can share my phone. Yeah, you can still enter swipe trades if you have less than see, 1,000 is not the recommended. They're just telling you if you have $1,000 account 0.04 lot is you risking 1%. So that means if you do 0.08, you're risking 2%. If you do 0.12, you're risking 3% on a $1,000 account. So this is just a point of reference. I have people who started swipe trades accounts of $25 or $50 and grew them into the thousands. Without swipe trades, harmonic scanner can also show you take profit and stop loss. But honestly, determining your stop loss and take profit is going to come with you continuing to plug in the IMLTV and things like that, because it goes along with support and resistance. I definitely recommend each of you research support and resistance, because even though IMLTV and IML Academy are there, you can still definitely do some continuing education outside of that. Get familiar with support and resistance, because that really puts you in position to, you know, make a lot of money in the foreign exchange market. If you can understand that and recognize that, that will help you identify stop losses and take profits as well. All right, so let me unshare this. Stop share. Okay. So let me share my phone screen with you. All right, here we go. Okay, so this is the demo account. This is what I use whenever I'm trying to show someone how to enter a trade. So the numbers and stuff aren't moving right now because the market is closed. So that's why you don't see any activity. Thank you, Mahogany. I appreciate it. That's why you don't see any activity. But to just kind of show you, quotes is where you actually go to be able to, hold on. Okay, there we go. Quotes is where you actually go to be able to see the pairs. You know, as I was showing you, I have a few listed here. So if you see blue, that just means that the price is going up. If you see red, that means the price is currently going down. And so sometimes, depending on what's happening in the market, they could be flickering, going up and down, or whatever. All right, so let's just say, and I'm still looking at my PowerPoint, even though you can't see it. Let's see, let me find a pair. Hold on. Oops. I'm trying to find a pair. Okay, let me just pick a random pair. So let's just do USD. Let's just do Euro USD because at the top. So you'll tap on Euro USD. It says trade. So you click on trade. Instant execution. Some of you may see market execution. If you're using swipe trades and it says buy by market, this is what you want your screen to look like. You want to see instant execution or market execution at the top, because that means that you are getting ready to enter that trade immediately. Okay. Now, with that being said, right under instant, now if you get a pending order, click on instant execution and you see a window pops up. So this is where you go to enter buy limit, sell limit, buy stop, sell stop. Whatever swipe trades, harmonic scanner, your trader that you're trading live with, the educator, tells you to do. If they're saying set up a buy limit or sell stop, this is where you go to select that. So you would just tap on it. So you would select sell limit, or you would select buy limit, or you would select buy stop. Now, let me show you this to pay attention. Instant execution means that you're entering the trade where it is now. So if you notice on instant execution, don't pay attention to deviation. I've never used it before. I don't really know what it is. So I don't really use it. Okay. So the only thing you're paying attention to is the stop loss, take profit. And then this, where you see this 0.10 at right here, this is your lot size. So this is where you go to change it to 1.00 or 0.02 or whatever your lot size is, okay? That's there. So notice this. If you have instant execution, all you see is stop loss, take profit. if you have buy limit, buy stop, sell stop, you see how the option for price popped up? So this is where you would go if you were on Swipe Trades and they said set up a sell limit, okay? And in that sell limit, they wanted your price point to be 124,228. You would type that in. Then where it says stop loss, you would type in the stop loss that they gave you. So you're literally copying and pasting everything that they gave you, okay? They told you sell limit. They told you the price. They told you the stop loss. So we're going to do 1.24, and I'm making this up literally while we're sitting here. 360, okay? They tell you to take profit. 1.24, and this is a sale, so it's a little lesser. 158. And then literally you would just hit place. I can't hit place, market's closed, it won't let me. But literally, that's all that you have to do to enter a trade. So we are giving you, well, the company is giving you the actual tools to learn the skill set, but we also have these products and services that if you can copy and paste, you can literally profit, okay? And so they give you those tools, but you understanding lot sizes and pips is the part that I need to make sure that you have so that you can continue going forward and, you know, making profitable trades. And so that's pretty much how you enter a trade. Now, there's one last thing that I'm going to show you real quick, and it's 4:30. We've been on here an hour and a half. I'm done in 5 minutes. I promise. I'm done in 5 minutes or less. So I talked about the swipe trades. I may do a training on candlesticks. Candlesticks and trading naked Forex is like bomb. I don't really use a lot of indicators and stuff like that. I use support and resistance and candlesticks. Honestly, that's what I do. I am in the process of learning some other strategies and using some indicators and things like that, but I don't use a whole lot of that. And I pretty much use swipe trades and harmonic scanner. Okay, so let me show you. I wanted to show you the harmonic scanner real quick, just because a lot of people use this. I have a harmonic scanner training video on YouTube if you haven't seen it. I did it for my team about a year ago, and it actually is like popping, I guess you could say. It got almost 50,000 views on it right now. So a lot of people use that to help learn the scanner. So if you haven't taken a look at that, you know, look at it when you can. All right, so let me share my screen one more time so I can show you the harmonic scanner. The harmonic scanner also puts you in position to copy, paste, and profit, even if you don't understand everything yet. The harmonic scanner is super cool because, as you can see, if you look at it, it gives you your entry point here. It gives you your stop loss, and it gives you take profit 1, 2, 3. Look familiar? Similar to what you actually saw, with swipe trades. But the harmonic scanner is what I like to call an on-demand signal service, because as long as the market is open, you can get these trades, whether it's 8 o'clock in the morning, 12 o'clock at night, you know, and you can come and log in based on your availability, and they will give you signals. And so as you can see, they said entry here. So you could set a pending up for this entry, or if you're watching it and it's close, you can go ahead and actually enter that trade. It tells you your stop loss, you key that in. It tells you your take profits 1, 2, and 3. In this particular case, it hit 3. So the person that got in at this entry and wrote it down to 3 made quite a bit of money. And so same thing as what we just went over. If you actually got in at 1.94135, you would take 1.94135 and subtract it from 1.94671. That's going to tell you your risk, okay? And then you'll take 1.94135 and subtract 1.92977, and that tells you your reward. So as you can see with those basics that I just shared today, it puts you in position to be able to more effectively use the products and have, you know, a working knowledge of what you're actually doing. You can tell if it's a buy or sell from what we talked about before. Remember, if the take profit is going down away from the entry, it's a sell. If the take profit is going up, it's a buy. Camille Westmoreland is my YouTube, my first and last name. It's moving to the right, from left to right. The scanner. The longest that I've kept a trade in pending, not longer than a day, honestly. Most of my trades tend to hit, and you make a determination based off of yes, Camille Westmoreland. I make a determination on how long I stay in pending based off of the time frame of the trade. So like in this one, it's an hour. So if 10 hours pass and it still hadn't hit, it's probably not going up there anytime soon. So I would take it out. But if it's a day signal on the scanner, I may leave it in there a couple of days. So it's totally at your discretion. And if it looks like it was heading there and then it turned, and then also scanner trades expire. So the scanner is looking, and then if that scanner trade is still there, I would leave it because they're saying it's still going there. But if that thing expires, I would take it out. And so those are different things you want to look for. I just want to make sure that you're clear on that. So you guys, it's 5 minutes later. I'm not going to be like pastors who keep talking and talking. So I am done. Unless anybody else has any questions. You're welcome. Who was that just said that it flipped? I saw you. You watched IML Academy, but it clicked. You're welcome. You're welcome. You're welcome. I see a lot of thank yous. Everybody's welcome. You are welcome, and you're welcome. Okay, so, yep, absolutely, Julius. This is a sale. All right, cool. So, yeah, Pastor Jeremiah, Stevenson is a swing trader. A lot of the harmonic scanner trades aren't swing trades. So, it depends on the type of trader that you are, whether you're a swing trader, positional trader, a scalp trader, will determine how long you choose to stay in a trade. Awesome. Thanks, Miriam. I appreciate it. I'm glad that you all learned so much. Hey, Miss Vicky. All right, Tahira, Reginald. No, the scanner, Reggie, is actually part of your subscription. So you just go to imlharmonicscanner.com and log in using your IML username and password. So, all right, you guys, so this is going to be up in the members only chat within the next hour to an hour and a half. So be on the lookout for that. And it's also going to be posted on my YouTube channel so that you can have access to that as well. So the next training date, I don't have one yet, honestly, because I travel so much. But when I am still, I like to do these. So thanks, Cheryl. Members only. Search for members only YouTube. You will submit your IML information. Once we review and confirm that you're active in Jewel Tankers organization, you will be added to the group. We have a lot of trainings that happen there as well. So make sure that you get plugged in there as well. All right, you guys, we're going to go ahead and wrap. I thank you so much for jumping on. Be on the lookout for the next training times. And then if you have questions, feel free to post those on the video and members only, because that'll give me some direction on what to talk about the next time. So thank you all so much. You all enjoy the rest of your evening, and happy trading to you guys.